Welcome to my $100,000 stock experiment, Sell Rules, week number 43, ending February 1st, 2019. I'm sharing my stock journey as I practice and develop my sell rules. This isn't an endorsement to purchase any stocks that I bought, nor is it an endorsement to purchase stocks in general. I'm just allowing you to follow along as I buy and sell stocks. My basic premise is my start date is April 13, 2018. I have $100,000 to invest. My goal is to double my money in 1 year. My focus is on practicing and developing my sell rules. And I'm trading in my rollover Roth IRA, so I have free trades and no tax implications. These are my sell rules as of week 40, and I am revising them a bit. I tightened up my sell rules for week 43, and I'm trying to make them simple and also measurable and sort of concrete. So number one, I like to minimize my losses by setting that stop limit order. And since I work full time, this allows me to not worry about it during the day. I just go ahead and put in my floor and a stop limit order. If it hits that floor, it automatically sells. So initially, when I first purchased the stock, I just put in an 8% below the purchase price. So my max loss should be 8%. And then each week on the weekend, I revisit that floor setting. And I was going somewhere between the 20-day exponential moving average or the 25-day simple moving average. And I evaluated my charts, and you'll see later on in this presentation that I've decided the 23 exponential moving average is a good place to set my sell limit. So I'm going to try that out and see how it works. I do like my stocks to be gaining a minimum of 0.5% a week. And then I have the question, do I want or need a decline from the peak rule? I do want something to protect my profits from my big runners. So when we get to Kirkland Lake Gold, you'll see how I'm handling this, but I don't have yet a concrete rule to practice out on other stocks. And then I took out the bottom two. Do I want or need to take a profit at 25%? And I think not. I think I like using a moving average or this number 3 rule and not just do a certain profit percentage. And then the last one, watch for stocks that I've sold to look for repurchase opportunities. That's really a buy rule, not a sell rule, so I'm taking that off as well. The market is in a confirmed uptrend, and it's okay to add to our portfolio. Last week, I shared with you the 3 major indices, but this week I'm just going to talk about the S&P 500 because they're all traveling around the same anyway. So last week I put that dot blue line, which was the closing price for the previous 2 Fridays. And I was hoping that this would move up, this average would move above that line, which it did. And it also closed above 2,700, which people thought was really important. And if you look down in the volume section, you can see that the last 3 days it had nice volume as well. So while it's still below the white line of the 200-day moving average, it is getting closer to crossing that. And the VIX, the volatility index, I really like that to be under 16, and it did close Friday at $16.14. So it's moving in the right direction. On this chart, the lower the volatility, the better. I did sell 3 stocks this week. I had identified 4 stocks last week that were not behaving well and were at risk of being sold, and I did sell all of them except Herbalife in the brown. That one I did not sell. Horizon Pharma, I sold it on January 28th. I had held it for 10 days and I lost 6%, $630. Dexcom I sold on January 29th. I had held that for 12 days and it was down 2.5% and I lost $250. And you can see that black dot over right around 139.14 where the dash red line is, and it intersects with the 20-day exponential moving average. So I did sell that, but I did not take the 8% loss. I only took a 2.5% loss. And I also sold Salesforce CRM again at the 20-day exponential moving average on January 29th, where that black dot is right on top of the blue diagonal line. I did evaluate this, and this is why I decided to change my exponential moving average from 20 days to 23 days. If I had been using that 23 day, then I would not have sold this. And this stock has continued to go up since my sale price. So I changed up my floor rule to be using the 23-day exponential moving average. I don't know that this is exactly the right point, but this is where I'm going to try for a while. And I also removed some of the lines and changed up the colors a little bit. So you'll need to look at my charts a little bit different. Number 2 is showing I'm using an 8-day simple moving average. Number 3 is a 13-day simple moving average. So those pink and green lines may be different than on previous charts. And the reason I'm moving those two to those points are my trading partner who I review my stocks with each week. She's more of a swing trader, and she looks at these two moving averages. So I'm switching to those just so I can have them on my charts when I review them with her. And then 4 is the blue line, the 23-day exponential moving average, which is what I keep raising my floor up to. I also purchased 3 stocks this week. I'm not going to include these in my regular bar chart for my current holdings because they just have 1 week worth of data, but you can see that CYBR and IIPR are both up, and CTRE in the red is down slightly. I'm going to review these 3 new purchases from the weakest to the strongest. CTRE I've held for 3 days and it's down 1%. This stock was on the IBD 50 list and it just cleared its pivot, so it's a little bit over the 5% that is recommended buy point, but I did purchase it. And it had a relative strength of 97 and a composite rating of 99. I follow the CanSlim style of investing for growth stocks, and you can check it out on investors.com, and you'll see these RS ratings and composite ratings in the IBD 50 list if you want to pick out stocks like these. IIPR purchased January 29th for $61.45. That dash green line with the orange box shows you where I purchased it. This stock is up 3% in 4 days that I've held it. It's a stock that I've held before. It had a high RS line and a composite rating at great sales and earnings. Stock Doctor says it's a C+, so not the best, but still okay. In CyberArk software, I've held this stock 4 days and it's at 4%. It was on the IBD 50 and I bought it in the proper pivot point. It has a new RS high at 98, that's relative strength, and the composite rating's 99. I like this stock because it's in the computer software security group, which is a strong group. It had good sales and earnings, and Stock Doctor is an A. This is my current holding bar chart for stocks that I've held for more than 1 week, and each bar represents 1 week. So in the middle there, Kirkland Lake Gold I've held for 7 weeks, and Square right next to it in the purple I've held for 4 weeks. And you can see there's 4 stocks there that are performing nicely. I also look at my current gains by dollar value. This is not how much I hold in the stock total, but just the gains since I purchased it. And I sort this by the losers. So my theory is if I take care of the losers, that the winners will take care of themselves. The stocks that are most concerning here to me are number 1, CDNA, which is down about 5%, and I've held that stock for 2 weeks. The next one in the list, CTRE, is down 1%, and I just purchased it, so that's not a concern yet. But number 2, down towards the bottom, Square, that stock's concerning because it was up 24%, and this week it's only up 13%. And then APYX, that stock's sort of going sideways, so I just want to keep an eye on it. It was 10% last week and 9% this week, but it's still doing still doing fine. I also take a look at the percentage change for the week and I sort that by the losers up on the top. I do want my stocks to be making about at least a 0.5% per week, and I don't have any stocks that I'm concerned about that right now. But I do see the 4 stocks on top that are not behaving nicely. They're all down for the week. So the one that I've only held for 1 week, CTRE, I'm not concerned about, but the other ones I want to keep an eye on. So I rated my current holdings, stocks that I've held for more than 1 week. I rated those weakest to strongest. So CDNA number 1 is my weakest stock, and KL number 8 is my strongest. So now I'm going to review these charts, weakest first. CDNA, I've held this stock for 6 days and it's down 5%, and I am raising my floor to my 23-day exponential moving average, which means that this stock may get cut because it's pretty close to that point already. Herbalife, I've held this stock for 23 days and it's up 2%. I am raising my floor to the 23-day exponential moving average, and I'm hoping that this stock starts to take off because 2% in 23 days is really not what I'm going for. Apex, this chart I can't get to print in Fidelity for whatever reason, I don't know, but I've held it for 16 days and it's up 10%. It went down slightly from last week, so it's not quite 10%, it's like 9.6%. Going sideways, hopefully it will start to go up. And I am raising my floor. Viva Systems, I've held this stock for 11 days and it's up 7%. And I am raising my floor like the rest of the stocks up to the 23-day exponential moving average. Square, this stock I've held for 4 weeks and it's up 13%. But last week it was up 24%. I am raising my floor to 68.11, which is the 23-day exponential moving average. And my thought is if it can't hold its 200-day moving average, which is that white line, then there's probably better places to put my money. This stock I bought because it had performed so well last year and it was a stock that was below its 200-day moving average, which I typically don't buy stocks that are below their 200-day moving average. But I call this a bottom feeder, and I have made a nice profit in it so far, so hopefully it will rebound. Zen, I've held this stock for 18 days and it's up 10%, and I'm raising my floor up to that 23-day exponential moving average. Chegg, I've held this stock for 4 weeks and it's up 16%, and again, I'm raising my floor. And Kirkland Lake Gold, I've held this stock for 8 weeks and it's up 35%. This is one of the stocks that I need to get to a point where I want to protect my profit. So last week I was up 22%. So I've gone over the normal 25% profit mark, but I'm not ready to sell this stock. But I did want to raise my floor, and I'm raising it up to where my 25% profit mark would be. So 29.84. If this stock falls below that, it will trigger a sell, but I'll still have a 25% profit. I benchmark my stocks against the S&P 500, so I'm up 20%, 20,398 in the 43 weeks since I started my experiment, and the S&P 500 is up about 1.9%, 1,891. The industry grouping compared with last week's is down in the right-hand corner, shows that I got rid of a couple of medical and I added the real estate holdings. My weekly tracker, I highlighted the areas in yellow that I liked, and there's no areas that are causing me concern this week. So my average gain is continuing to go up, which is good. My percentages of winners versus loser is 82%. So I have 11 stocks that I hold and 9 winning trades and 2 losing trades. My largest gain has continued to go up, and my total gain is also going up. And that max loss days is going down. If you have losers, you don't want to be holding them a long time. And my sold positions, I did sell 3 positions this week and they were all losers, so I am getting rid of my losers. I do find it concerning that I did have 3 sells this week. I don't want to keep selling every week. I'd like to be picking the winners and holding the winners. And my cash balance shows my buys and sells, and I have an ending balance of 1,325. So I'm basically 100% invested. Thanks for watching. Keep an eye out for my next episode, or better yet, subscribe to my channel. Don't forget to hit the bell if you want alerts when I post a new episode.